Rashesh, first let's talk about markets, and I'm quite impressed with the way how markets have made a comeback in last 8-10 days. Indeed, bull markets always climb the wall of worry, and in last 10 days markets have managed to climb the wall of worry.
Yeah, I think the markets are extremely resilient, and that we are seeing from time to time. And I think one of the larger reasons for that is a lot of flows into Indian mutual funds and insurance companies. I think first time after 5 or 6 years, we are seeing that Indian households are again allocating money into equities via the mutual funds, via insurance companies and all. And that, according to us, is the biggest change in trend, because all that household saving which was going in gold and real estate, some of it has started to come back into equity markets.
What about the big concern? And the big concern is actually not earnings. The big concern currently is that foreign investors are overweight India. They are the real price makers, and other markets are doing much better than what India has done of late. Fund managers are paid to perform. They are not paid to really pick and prioritize the markets they like. If China is giving better returns than India, will the India story get slightly dim?
Not so much, because as I said, the Indian institutional flows are also very strong, and in fact the good news is that if FIIs have slowed down, at least the Indian institutions are very active, because we are seeing mutual funds are getting 7,000 to 8,000 crores of equity inflows every month. So if I add that up, there is going to be 80,000 to 100,000 crores of equity money coming in, which is close to $14-15 billion. Very almost similar to what FIIs would bring into the country.
So DIIs are the new heroes. Let's not get fixated about the term we use on Dalal Street, the Gora money.
Yeah, what happens, the Gora money creates a lot more volatility in the market, because it comes in and goes out. And as you said, they become very overweight. Now they are maybe, calibrating their allocations to India. So they create market volatility, which creates all the excitement in the TV channels and everything else.
That's good for my business.
Absolutely. But what would equity markets be without all the volatility and the concerns around Greece and everything else? But I think from a stable money point of view, Indian institutional money, LIC, Indian mutual funds, Indian insurance companies, according to us, they collectively will invest about $35 to $40 billion into equity markets in the current year.
$30 to $40 billion. That's about 1,50,000 crore
of Indian institutional
money.
Where
will so much of money come from?
LIC is expected between $14 to $15 billion.
Okay.
Indian mutual funds is another $14-15 billion. That's 30, and Indian insurance companies another $8-10 billion. So if you add that up, even if you take 30 billion, that is 1,80,000 crores. That is going to be more than the money that comes in from the FIIs in this year. But FIIs will come and go, and the markets will in the short term swing to FIIs coming or going into the markets. But the long term real stable money is now also coming from Indian institutions. So they will counterbalance, and that is why we are seeing the market is so robust, and and the trend is so resilient. Because don't forget, India's savings are $600 billion. So even if you take 5% of that, that's only $30 billion.
The big headline is Greece. This time around, market men are not nervous about Greece. In fact, most of the markets, or most of the European markets and high beta markets have been quite resilient. Even though it's 2 minutes to midnight for Greece and 30th of June is the deadline, somehow markets are just ignoring Greece as if it's a small pond. Let's not worry about it. It's time to move on. Can Greece problem come and hit us? And can they hit us hard? And if it hits us hard, what will happen?
I think it's an issue all over the world. I'm slightly conservative, because I think there is a lot of comfort and maybe confidence that markets will overcome Greece. And I think the two big events in the coming months, one is Greece and the other is US Fed increasing rates. Now, since both these events have been on the horizon for so long, there is a sense of fatigue, there is a sense of over-analysis. And but I do believe that as and when either of this actually happens, there is a high likelihood that markets may be unprepared for that, because of this exact what you're saying, the confidence and the complacency that is there. And I'm not talking about the Indian markets, I'm saying about the global markets. When I was in the US recently, spoke to a lot of US investors, and it's the same thing out there.
So
people
global
are
markets are
hoping.
So global markets are not prepared for a Grexit.
I think that's my personal view.
Okay.
That's my personal view, that maybe people have not understood the real what are the repercussions of that, what are the implications that are going to be there, and if and when the event happens, a very small probability maybe, but if and when the event happens, I think people will have to go back and see the implications a lot more closely.
So when you went to US, where did you shop? And where is time to shop in India?
Actually, unfortunately, there was no time for shopping. We are part of the delegation with the finance minister, and we had a fairly packed schedule back to back.
But where did you tell your friends to shop in India? Where are you telling them to shop now?
I think our view has been fairly clear. We think the next 5 to 10 years, a lot of opportunity is going to be in Indian financial services, is going to be in Indian consumer opportunities, because we do think brands and all are now coming of age.
Okay.
So, and the last one would be pharmaceutical, because we think Indian pharma sector still has a lot of headroom for growth.
So these are three basic pillars: financial services, consumers, and then look at pharmaceuticals.
And
Why
then
pharma?
Specialist investors will come into infrastructure, will come into capital goods, who are specialists in that. But for an all-purpose general investor who wants to buy for the next 5-10 years, not really follow, tactically follow the portfolio, I think these three are evergreen investment opportunities in India.
The infra space is called as the dirty picture of India. So are you of the view that it's not time to buy the dirty picture?
I think it's from case to case. I think it's from company to company. I do think a lot of infra companies are still over leveraged. We still have to see a lot of asset sales and monetization. And a lot of asset sales will only happen when the assets become productive. Fortunately, a lot of those infra projects which were stuck, we are starting to see they at least going forward. The environmental clearances are coming, some of the road projects have been going forward. So all of that will allow companies to maybe sell assets and monetize them, and hopefully start reducing the indebtedness.
Are you confident that in the second half of this financial year the investment cycle or the capex cycle will pick up?
I think it should pick up by the end of third quarter or early fourth quarter. But it will still be a slow pickup. I think our view is that the large part of the investment cycle, the capex cycle, will have to be driven by government and the PSU company spending. I think the private sector balance sheets are still going to be very stretched, and the private sectors will not invest ahead of the curve. They will wait for the investment demand to pick up, and then they will invest, while government and government companies can invest ahead of the curve.
They don't have private sector, you are absolutely right. They don't have the appetite, and they don't also have the balance sheet strength. Now, government is looking at investing in 3 or 4 large sectors, and every new cycle has a different hero. It has a different theme, so to speak. So the broad sectors are railways, housing for all, you got Swachh Bharat, you got Digital India, Made in India. So out of the 3 or 4
and
large
the last one will
themes,
be in the defense sector. We are seeing that government in the defense order will also give some preference to things manufactured in India.
So which is the top headline theme you are bullish on?
I think infra is obviously a key one.
Okay.
And
how does one invest in infra? Because infra again is a very broad definition. It is like saying I am bullish on equities. So what do you like in infra? EPC companies, road companies, utilities? Do you like capital goods, product companies?
I think the easiest pick are good quality EPC companies, because a lot of them had a lot of trouble because they were not getting funds from their clients. They had a lot of orders on hand but not able to execute. I think a lot of EPC companies have cleaned up their act. They are not as capital intensive. They are not as indebted. Some of the EPC companies also become asset owners, but a lot of them are cleaning up their act now. So the ones who are becoming asset light again are focusing on execution, are going to be, I think, good opportunities. Some of the specific infra assets, like we like the airport assets, we like the road assets. So a lot of those you might see IPOs coming out in the coming year of specific infra assets. Large part of the infra problem in India has been largely in the power sector, especially in the power. The worst have been the gas-based power plants because they haven't got gas. So I think if you take asset by asset, like a lot of the renewables are doing very well, especially wind is doing very well, solar is doing very well. You must be seeing how much investment is going into that.
Every day we get a new headline about which corporate is ready to commit how much in the renewable energy space.
I think renewables are a hot one, and in renewables it's largely wind and solar, not so much hydel. But roads are a big one. There is a lot of opportunity in that. So airports are very big opportunity because they still have a lot of growth ahead of them.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.